Good morning, folks, and happy Friday. It's 8:01 a.m. Chicago time on the 5th of April, 2024. It's non-farm payroll, U.S. unemployment Friday, and also a big sell-off yesterday. So there's a lot to talk about. This is episode number 2651. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So, quick start with the pre-market summary sheet here. Very little on the calendar, but we still have Fed's Barkin, who spoke yesterday as well. At 12:15, that's when a sell-off started, and they're speaking again today. So I would make sure your news feed is up and running, and that you're attentive to that if you plan to trade. Again, the big piece today is the non-farm payroll release. What's on deck? Well, yesterday, I missed it by a day. If you recall, I talked about structure that showed that the S&P is really showing weakness coming into yesterday, the day before yesterday's session. We ended up closing the gap upwards. We'll talk about that in a bit. And then finally, it follows through. Here's the thing that I want to discuss with you a little bit. I want to talk about the purity of the movement and the order flow when the market is actually allowed to move. And that's something that's just, I don't know how to say it. I hate to sound obsessive or something about trading, but it's poetic. It's so beautiful when it's happening. And it used to be a lot more common in the early 2000s when I started than it is now, where the trade seems to be just everything is contested, or just, in general, a lot more electronic. But anyway, back on topic here. Fed speakers raised doubts on rate cuts. The market really responds with some pretty decent selling. The S&P dropped over 100 points from its high yesterday. We're trading in the 5,200 handle, the century figure. More Fed speakers today. There's also escalation as Israel allegedly killed Iranian generals through a direct attack, drone attack. Iran has said multiple times that the decision to retaliate against Israel has been made, and it's just a matter of time. Israel this morning came out, said if Iran retaliates or attacks Israel, then the war is going to take a whole new whatever. So this is just, how far can you piss kind of thing. But just the whole thing's idiotic. So the direct conflict between Israel and Iran, really bullish for crude oil, bullish for gasoline, RBOB. The energy complex is really responding to this. A lot of instability in the area. We notice here today, look at the dollar. The dollar was slightly up this morning, and now it's firmly up after the non-farm payrolls. The U.S. jobs report comes in at 303,000 jobs created in March. 200,000 expected. This is, of course, more pressure on inflation, and therefore more that the Fed has to consider, in the fact that it just might need to just hold off on on dropping rates, right? So the immediate reaction from the market is to sell off, and since then we've taken back the SOC. We'll cover that. Unemployment rate came in at 3.8% versus 3.9% expected. The S&P multi-distribution profile, as you would expect, lots of price discovery this morning. The volume is really excellent. We're above 1 sigma of volume, overnight volume over the last 252 sessions or 1 year. So good volume. The range, 33 points. You would expect it to be bigger, but still, the range is better than one standard deviation at 33 points. The inventory is 91% long after yesterday's sell-off. So the day has a lot going for it. Generally, non-farm payrolls, the employment Fridays. Generally, we get an hour to two until the European close of action, and then it just kind of goes into a drift until the close. Next week's just a standard week, just so that we can think ahead. Next week, we have core inflation. We have the inflation numbers on Wednesday. So that's going to be the next thing that the market's going to pay attention to. Bank of Canada rate decision, FOMC minutes, the ECB's rate decision, PPI on Thursday, and the ECB press conference on Thursday. And then we get GDP on Friday for Great Britain, and we get Michigan sentiment. So quite a few data points, some relatively important data points for next week as well. So look for this thing to kind of move around for the first hour or two. Europe closes, likely to drift, and then challenge, one last challenge at the close. And then next week we have a lot to consider as well. Looking for some pretty decent action there. Let's take a look at what has happened. So back to this. Right? This was a really important gap down and then closing strong. The next day came in, instead of drifting up and opening in a gap, it came in and opened in value. To me, I saw that as a very interesting week start to the session, and it ended up basically pushing back up, closing the gap, going to our 52.80. The high there is 52.80.75. Went to the 52.80, basically closing the gap. Yesterday, we gap right up. Okay, we hold steady. Yesterday was pretty boring. It's in this kind of upper balance area. We're back and threatening the high, the RTH high at 22.75, and then right 15 minutes after the first Fed speaker started talking, the market started selling off pretty aggressive. And what we see here is incredibly poor structure all through the range, the sell-off range yesterday. Very aggressive, but all in all, a pretty decent trade if you were attentive at the time. And that's the thing, you cannot be lulled to sleep through it. So overall, we ended up, with several opportunities. I'll outline a couple of setups that showed up for me. But overall, we took back the day before, the last 2 days ranges, and look at where we stopped. If you recall, I put these up quite some time ago, weeks ago, and I talked about this being a balanced range here. This would be once we give up the 52.80-ish area, 52.57 especially. We expect the market back in this area here. And then the other side, the low side of that area, is right where it stopped yesterday. So this bar right here goes right into the 51.95. And that was basically the low yesterday, 51.94 1/4. And we ended up settling at 51.97. Pretty fantastic. Let me extend that. I think these are locked. No, they're not. Yeah, I'll extend it. You can see that we're just carrying that forward. And so what do we expect today? When we look at what's happening here, we know we have this big-ish kind of balance zone right in here. So it goes from there all the way to up here. We've got weak structure. We've got a little bit of resistance of 52.35. We're at 5200. We're opening at 5205. So today, under normal circumstances, I would expect with a close like this, and by the way, we didn't transfer value down. Note that the value stayed at the top. We didn't transfer it down. And what that usually means is that we didn't really find buyers, which means that the auction is likely to be incomplete. So, as you would normally expect, you've heard me say for the last 12 years, we would expect a drift lower. So the way the market closes after a run informs whether or not the auction was successful, and this auction was not. It was still an active price discovery until settlement, which makes it so that it is likely to drift down in the overnight session. It did just slightly, not much, a few points, 51.91, and we are up here at 52.07. The news this morning in the non-farm payrolls was not all that great. It's not supporting the idea that the cuts are going to take place. Looking at the Fed fund futures, you know, everybody's eyeing June as the month where the Fed's cutting 25 basis points. That has dropped from about 61% to 57%. So there's a move down in Fed fund rates there. Market repricing the possibility, the likelihood that, yes, we'll get June, but hey, when you go down the line and look at the July 31st meeting, the September meeting where they really expected some cuts, those have all kind of flattened. The probabilities on those have all flattened. So the market's, I think, fearful that we may just get one cut and the Fed will just hold to see what the effect of that cut is. And that's what we're pricing in here. This is why we're in risk-off mode. So the combination of the fact that we've moved from the upper distribution into the current balance zone. We've tested the low volume node overnight right there, 51.91 versus 51.93. And we are trading right here. This tells me that the market's completely out of balance. Currently, there are likely to be higher time frame traders coming in and readjusting their positions this morning. So I'm expecting some pretty decent movement on the open. We're up against some pretty poor structure. All of these shaded areas here are single prints, poorly auctioned areas. Okay, so what's the expectation for today? The expectation is it's likely to tackle yesterday's settlement and the low and kind of stick its hand under the water to feel for firm ground. And if it does find firm ground, and there's no way for me to tell if it can, if it does find firm ground, then I'm expecting this thing all the way back up into that 52.35 area. So 52.35 on the upside. I'm expecting it to take a rest in the zone here for today, but it's very, very likely to check below the 5200 and see if there's more selling interest below yesterday's low. We'll see. Again, past performance is not indicative of future results. The market can do whatever. It just depends on the overall sentiment. Some players in here might see these as cheap prices, a good time to put cash to work, right? So it's kind of like a buy the dip situation. But I am going to, if we follow the normal auction, we do have an incomplete low, and we are likely to check to see if there are really some buyers down there this morning, and that's what I'm looking for. Okay, that's the key play for today. The other play, of course, is it makes an attempt to push lower, no interest into the 5200. Again, it's a century figure, and then it starts its trip back to 52.35. And then the other piece is, of course, it tries to respond back up into the 52.20 area or so, finds that there is no interest in buying today. There's no appetite. And then it pushes through the low, and it just has weak rotations up, which would be a beautiful thing as well. because that brings us down into the 5150, 5145 area is the next key test area. Okay, so yesterday, just a quick run through. You know, looking, I switched, by the way, to one tick by 6 for PNF because one tick by 4 was too busy. Beautiful uh, kind of sideways chop, like a drift down from the open. We opened yesterday. We immediately took out the overnight stat. So the overnight high was immediately challenged, and we came down. And what we ended up with yesterday, and I discussed this in the Convergent channel chat room. What we immediately discussed is this market is kind of following this funnel between RTH. Look at how it's kind of following the flow of RTH, VWAP, and mid, and coming into the full session VWAP. And what I talked about is, hey, something's got to give here, because what it's doing is it's compressing and compressing and compressing against full session VWAP. We finished the IB right here. The IB is the shaded area. The IB is the first hour of trading's high and low. Very important reference, because much of the business done by the bigger players is done, statistically speaking, in the first hour. So we call that the initial balance, and we track what happens there. And then there's some statistics associated with the initial balance that we use. And you know, it comes down and it builds this beautiful collision type structure, just a beautiful setup for a long. The long takes us from below the IB low to the IB high. We get the Fed speaker at 11:15. There's, you know, some rosy things said and then not so rosy things said. And then once it breaks through, look at what it does. It breaks through and it gives us the IB retest setup. Okay, didn't catch that one. And it runs down. It creates a zipper here, but it never actually pulls back for the test. So it's still pretty aggressive. The selling's pretty aggressive. We're looking for a gap to settle trade. The ideal trade is the IB retest on the break. Remember, it broke down, then it went neutral by breaking the IB high, then it broke down. So we're looking for any jab into the IB would be a setup short. And the short setup would be targeting, which would be around 52.94, would be targeting settlement. It's your gap to settle trade back into the 52.67. Pretty good range there, about 30 points, a little under 30 points, 27 points or so. For that, tough to catch unless you're really wide awake and watching. But then we don't get very much here as we push into the prior settlement. And we have a small consolidation, pulls back towards the prior settlement, and then forms this zipper again. And then it's clear that it's just not able to hold on to these higher prices. And then that creates an aggressive scalp short. But the better shorts really are going to be against your price map. And our price map had the prior session low, which it paused at, consolidated, broke through. There's your pullback. Nice little zipper here showing us that there's two-sided action there. As long as it gives us a very well-defined high to set our to measure our stop buy and to create the required, R factor calculation. Am I getting more for my risk? And sets up just a really excellent short right there. And then from there, you just hold on. As long as it doesn't go back into the prior range, then you have price discovery lower for the rest of the session. From there, really just very classic, pullback shorts. There was plenty of them yesterday. Just a lot of structure, pulls back to zippers and continues. It's just, the point being, again, hindsight's 2020. It's nice to be a Monday morning quarterback and talk about what's already happened, and that's not very useful, but it has some educational value, and that is when the volatility and range explodes, the auction becomes much more pure. This is when a lot of people actually feel uncomfortable trading for the additional range and risk, but it creates a much purer auction, in my opinion. You start to really go back to textbook support, resistance, retests, breakout structures, zipper breakouts, that sort of stuff. It's a much nicer trade. Hoping for that today, given that the fact that we are out of bounds. Here's the SOC right here, 52.16 and a quarter, 52.16 half. Market drops, pulls back to VWAP, continues lower. I really was expecting it to continue and push the overnight low, and it failed to do so. And once it pushed back up and put in this higher low of 5,200, clearly has a hard time with the 5,200 century figure and breaks up. The shorts were off the table, and then since then, came back to the SOC, closed the SOC, and so now what we have is just balance, unfortunately. So this morning, it's we have a very clear overnight high, very clear overnight low. It's kind of wide with at 30 points, but we are on top of the overnight point of control, the full session VWAP, full session mid. So automatically, hands off the mouse on the open. Could go either way. We need to see what kind of a test we get before we jump in. So before I run out of time, I want to remind you that the Trader Bite is going to be retired. There will be all of next week, every day next week with the Trader Bite. And then on Monday, the 15th of April, that'll be the last one. We will, Edge Clear has sponsored a $1,200 MacBook Air M2 and for a giveaway. And the way to participate in the giveaway is to go to ft71.com/TB-out. It's also linked in your live chat at the top. And enter. You can enter with every prize giveaway. Today is a selection day, so be sure to enter today. Until the Monday the 15th, we're giving away a $100 gift card plus a 3-month Edge Pro X subscription free to the winner. We'll select a winner and a runner-up, and we'll announce it in the next session. So on Monday morning, we'll let you know who won today's. The raffle or the giveaway happens Monday, Wednesday, Friday, and then the following Monday, and that's it, folks. There are some other things cooking, so it's not like I'm retiring. I'm not that old. I'm a young buck at 50, 52. So there's a lot going on that's going to continue to come across, but it just won't be a daily Trader Bite. I think I've said all that there is to be said about trading over the last 12 years, and you've probably noticed that my process every day is boring and consistent and repeating, and that's the difference. The difference is in the process. It's in the process. Nothing fancy, no fancy tools, just a good, solid process to read the market and then executing your preset setups in the areas you've identified as part of doing the homework that we do here in the Trader Bite. Be sure to enter, again, ft71.com/TB-out. We'll announce on Monday who the winner was. Good luck.